The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down. The current picture is plain to see.
Inflation currently stands at 8.6%. In response, the Federal Reserve is raising interest rates by 0.75 of a percentage point for the first time since 1994.
The labor market is extremely tight, and inflation is much too high.
The Fed is developing a credibility problem where it's almost communicating too much, and inevitably it ends up talking at cross purposes to itself. So take what happened on Wednesday, where we have a 75 basis point increase in the interest rate, which is a very hawkish action by the central bank. But the talk had a completely different tone.
We are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
I mean, whether it was things like the summary of economic projections that seems to be more dovish, or some of the comments that Chairman Powell made during his press conference that could be interpreted in a somewhat more dovish way.
The American economy is very strong and well positioned to handle tighter monetary policy.
It's becoming harder and harder for the market to understand what they should expect from the central bank because of this communication.
Following the interest rate hike, stocks surged.
A quick dose of tightening and then inflation will go away and we'll all be fine. I think that is wishful thinking.
Mr. Powell said the central bank could raise interest rates by another 0.5 or 0.75 of a percentage point in July, a move that some worry could trigger a recession.
The Fed's going to be hiking as the economy is slowing. You've got all this demand destruction coming from inflation. I mean, the Fed is in the worst possible place it could be in.
I think the economy slammed into a wall about 2 weeks ago. You're seeing a big decline in employment now. You're seeing layoffs.
Chair Powell made the important point that the Fed's credibility is at stake if it doesn't deliver on price stability. But he may be too optimistic about the soft landing scenario.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%.
His true test will come if the unemployment rate ticks up in a significant way and inflation is still hanging around. At that point, he will have to stick with a tight money policy, even though he'll be under a lot of political pressure to let up.
President Biden, of course, continues to blame Putin's war in Ukraine for rising inflation.
We've never seen anything like Putin's tax on both food and gas.
But inflationary signs were there long before the Russian invasion. The real reason we are where we are? Well, spending is one factor, but loose monetary policy by the Fed for 2 years is by far the bigger one. The money supply soared, and interest rates were too low for too long during the pandemic. And that, combined with too much federal spending, is what caused the inflation.
I don't want to hear any more of these lies about reckless spending. We're changing people's lives.